Welcome to a special edition of the S&P 500 analysis. Today is July 19, 2021. In this video, we're going to take a quick look at the market, the sentiment, and the internal, and see how is this beginning of a transition is taking place. So stay tuned. Let's start off looking at this intraday chart here of the internals and also the index here. I got the SPX, the S&P 500 here, and as you can see, the SPX, the S&P 500 closed down 68 points or so, 1.5%, and the Nasdaq 100 only closed down 0.9%. I'm emphasizing the word only, and it was only down 132 points. Because if it wasn't for NVIDIA and the comeback from Tesla, this index would have been down much more. So we'll take a look at that in a little bit more detail later. But let's take a look at the internal. Here's the plot of the difference between the up volume and the down volume. And you can see that the down volume just increasingly more and more as the session progresses. And the up-down volume ratios ended the day with over 7 times more down volume than up volume. And here's the advanced decline for today. It started out somewhere around here at minus 1368 or so. Then it came to the low of 2,800. So it's practically almost the entire market was down, right? All the stock was down at this point, because there's a little bit over 3,000 issues traded in the New York Stock Exchange. Now, I monitor the advanced decline only on the New York Stock Exchange. I don't go and monitor the S&P 500 or just the Nasdaq 100. Okay, I'll look at the bond market as a whole. So you can see that it did come up a bit up to this minus 2250, so somewhere around 2,550. More declining issue than advancing issue. So at the low of the day, it was more than or close to 2,800 more declining issue than advancing issue, and it ended the day with 2,539 more decliners than advancer. And here's the tick. You can see I marked off this line here. This red line is essentially the minus 1,000. And up here is the plus 1,000. And also the dash line is plus 800, minus 800. You can see there are a lot of 1,000, minus 1,000 or lower tick, occur today. Also a lot of 800 as well. But there are a few 800 ticks, positive 800, and quite a few positive 500. But today, predominantly, you can see there are a lot of selling going on with a lot of negative tick, and you can see that on this cumulative tick plot here. Okay, and this is the S&P 500. As you can see, open gap down, and then it's basically just chop around and hover around this IB low. Then during the last hour, half an hour or so, it came back up, and that's probably got something to do with the OPEX pinning, and also you essentially got people that is just closing out the short position or just take their profit, and that kind of helped push the market up a little bit during the close, into the close. And here's the up-down volume for the Nasdaq. It's kind of all over the place. It's a little bit more choppy than the New York Stock Exchange, but nevertheless, there were 1.5 times more down volume than up volume. So it is not as bad as New York Stock Exchange. So that is a positive for the Nasdaq. But you could see that on the advanced decline, the low was actually more than 3,000 more decliners than advancer, but also came back up to a peak for the day. It was somewhere around 1,410, and it finished off the day at 1,952. So relatively looking at between the New York Stock Exchange and the Nasdaq, it appears the Nasdaq is performing a little bit better, if that's what you want to look for, a silver lining. But all in all, they are still down dramatically, right? So anyway, and again, we are looking at the ticks here. You see that not as much minus 1,000 or lower tick for the Nasdaq as we are comparing to the New York Stock Exchange. But all in all, there were a lot of selling as well, and we are seeing a cumulative negative tick. And you can see on the Nasdaq 100, it's been pretty much choppy, between the IB high and IB low after the first hour range is established, right? So the market is basically just kind of pretty much a range day today. If you look at it, ignore the gap down. So we'll see what it will bring tomorrow. And here we are looking at this 3-minute intraday chart of the S&P 500 and the market internal and the sentiment. You can see that it is pretty much the new high, new low. Finally went negative today at minus 87. So there were 87 more new 52-week low in the New York Stock Exchange than 52-week high. And also here you see that the up-down volume ratio, as soon as it opened, it was down. It was like 24-1 in favor of the down volume. That's how bad it is. When the New York Stock Exchange opened for trading this morning, finished off the day at 7.1, and the VIX did come up and came up to a high of somewhere around. Here's the high point, I believe, somewhere around 24, 25, almost 25. 25, and it closed the day at 22.82. So it is inside of that zone, that 20-30 zone that the market participants are getting fearful now. And also on the put call ratio, it is above this 0.75, the threshold that indicate the market participant or setting up hedges and also taking risks off. And it finished the day at 0.8. Then we look at the advanced decline. We basically saw that it ended the day at 2,539, more of declining issue than advancing issues. So doing a quick rundown on the daily sentiment chart, you see the VIX 22.5 and the put call ratio 0.8. And here's the up-down volume ratio for the New York Stock Exchange and also the advanced decline. We saw that earlier. And here's the new high, new low, minus 87. So more new 52-week high than 52-week low. And again, looking at this cumulative advanced decline line for the New York Stock Exchange, it is coming down. And look at the steepness of this S&P 500. Come chasing after it and try to catch up to it. Now looking at the Nasdaq 100 closed down 132.9%. So it's not as bad as the New York Stock Exchange, and the up-down volume ratio is only 1.56 in favor of the down volume, and the decliner led the advancer by 1,931. Then looking at the Nasdaq new high, new low, there are 215 more new 52-week low than new 52-week high. And here, looking at the cumulative advanced decline line for the Nasdaq market, see it is continue to make a lower low here. And right now, the Nasdaq 100 is still hovering near the 52-week high. Now, let's take a quick look at the daily chart on the S&P 500. As you can see, the S&P 500 came down and tagged this 100%. This 4257 or the 4255, remember that? One of the level that we said we're going to keep an eye on, and also the 4232. See, you put it at low in that and bounce back and close right above this 4255 and the 4257. The gap here, left the gap here today. So I'm looking for this to continue to move down and possibly get down to this 50% level at the 4159, 4159. But again, eventually I'm looking at these level down here. 4,020 and 39.74. So we'll see. Will they get a little bit of a bounce tomorrow and then continue on its way down here? Certainly, the market is making that transition to get a little bit more extended correction than we have seen in the past. Like I said earlier in last week's Wednesday video, when we have the market send us a message to be on the alert for a transition. And looking at the Nasdaq 100 daily chart here, you can see the Nasdaq 100 came dip below this 127, the 14,584. Right now, we're still looking for this to come down to this 14,073 in confluence with this trend line here. So we're going to see would it be able to come down here and hold and find support. If it doesn't, then we're essentially looking at this 13,713. Now, the Nasdaq 100 kind of got saved a little bit by the NVIDIA and Tesla, like I mentioned earlier. So it is actually performing better in a relative sense than the SP 500 today. And for the Russell 2000, we see the Russell 2000 dip below this pivot low, and it closed near this pivot low here. And right now it's closed at 2130.70. So we're still watching the Russell 2000 to come down and test this 2075 level. And finally, the Dow Jones Transportation. Remember, we were saying that this gap been waiting to get filled for quite a while, and we're looking for the Dow Jones Transportation to dip down toward this 14,242 and fill this gap. So today it dipped below it and it came back and closed above it, but all in all, the gap got filled. So it did leave a gap today, but we're still looking for the Dow Jones Transportation to make a lower low here, possibly come down to test this 13,656. And the Dow Jones Industrial, see that the failure of putting in a new all-time high brought it down today, and right now we're essentially looking for it to come down to this 33,400 area and possibly get down to this 33,000 level. So we're going to continue to watch for the Dow Jones Industrial to make it smooth down. And notice how much of the drop that the New York Stock Exchange Composite Index made today. It took out this low here, this 16,140, and right now it's coming down. We are looking at this 15,775 for the next potential support level. And the Nasdaq Composite, it came down and tested this pivot high here and close above it. It came down, it went to it. So right now it's kind of putting it a little bit of a spinning top. I wouldn't be surprised that we'll see a little bit more downside to come in the coming day, because eventually the Nasdaq has to catch up to the SP 500 and all the other indexes, especially it has to catch up with the accumulated advanced decline line from the Nasdaq market. And looking at the SPY, the ETF for the S&P 500, you see these low volume zone got taken out and got a nice little surge in the last half an hour, and that's due to probably OPEX and also profit taking from the short seller. Basically, they just want to cover the position. So you can see that it's coming back up. Nice little surge, but that's typical of the OPEX shenanigan. So I wouldn't take too much of it. Tomorrow, maybe we could see it come up and test this 425 zone and then resume down, because I am looking at these lower zone down here. And even though there's a level down here at 416.26, actually I'm looking at this low to get taken out eventually. And here on the QQQ, the ETF for the Nasdaq 100, see that it's kind of holding on to this composite point of control somewhere around this 354.50 level. So we'll see what this give it up tomorrow and work itself down to these lower area here, because there are a couple of these low volume zones that are going to be tested in the coming day. And eventually I'm looking at these levels down here. But for now, I'm going to keep an eye on these zones here, down at the 347 level. And the IWM, the ETF for the Russell 2000, got a little bit of a back test here at the 214 during the midday. But all in all, it's still working itself down to the 204. So I'd be looking at a little bit more downside on the Russell 2000 in the coming days. And here we are looking at the 10-year yield. You see that it came below this 12 level, this 1.2%. Remember, I was looking for this 1.2 somewhere in this zone here. So it dipped below that and closed at 1.18. So we'll see how low this will go, because here's some level down here, got a little gap here down at the 1.0 or the 10 level here. So as you can see, the US dollar came off and moving itself up. It went above the 93 level. And as I said before, watch that 93.5 to 94. When the dollar get up to that level, pay attention to the Fed. They're going to start coming out and talk the dollar down. And here, with the strength of the dollar and also the OPEC agreement to increase the supply, we see the oil came down and sold off. Remember, we did, expect it to come down to that 68 level here, but right now it's coming. It came down much more than the 68. So I wouldn't be surprised to see it work itself further down to somewhere around this 64 to 62 area before we get a little bit of a consolidation. Then we'll see how that supply and demand equation balance off and see what sort of political, geopolitical event might come in play to hold the oil up and possibly push it back up. And looking at silver, remember we are talking about this flag here, this potential bear flag, and we're essentially projecting this thing down to below this 24.71. And today it's making its way down here. Right now it booked this flag, so we'll see to see whether we get some continuation on the down move in the coming days and take out this 24.70. And if it doesn't hold this 24.70, watch out, we could see this down at this 22.70 area here. And for gold, remember I was saying that doesn't look like it could hold this 1804. Last night it booked to this 1804. Today it kind of came back a little bit, but I'm still looking for gold to retrace back down to this 1700 area, unless it could bounce back off from the 1804 and get above this 1846. Right now, I'm basically looking for continued weakness on the gold because of the dollar and the 10-year yield. Now, let's take a look at the market profile for the ES, the E-mini S&P 500. As you can see, today it came down and cleared off all these unfinished business here. So quite a number of stuff that it got cleared off, right? But we still got quite a few of single print and point of control that need to be tagged below. Today it finished with a poor low here. There is no single print. So right now, although it came off and came back up above this point of control, today's point of control, and so we might get a little bit more of an upside move tomorrow. Then we see a continuation come down and take out this poor low. This right here, this move here is essentially, look at this on the volume profile, this laughing out last 15 minutes or so. This move is essentially that OPEX, Monday OPEX move, right? So we're not going to put too much credence on that. And, see the overnight low, couldn't even get back above the overnight low, right? So we'll be watching that. And if we take a look at some of the level that need to be taken out, you see that there are some level up here. Remember, I was saying that these level, these single print, and also this point of control eventually need to get tagged. So that kind of gives us an insight that eventually we will see a little bit of a bounce back up to this, 4380 area to clean up all these mess here, right? But right now, we're essentially looking at a lot of these stuff down here back in June and also latter part of May that need to be tagged. So ultimately, I'm looking for this thing to come down to, below 4,000 and clean off some of these things back in March, right? These unfinished business is left there for quite too long, so it's going to come down and clean it up before we make a little bit of a bounce. So maybe this is the time that the market will teach the dip buyers that buying the dip doesn't always pay. And finally, looking at the heat map for today, this is the S&P 500 heat map. So you could see that, other than NVIDIA that really moved, and also Tesla, essentially Tesla came back up from, minus 17 point earlier, I believe, in the morning, and came back up and closed slightly up. Other than that, you see all these large cap, right? All these guys essentially down, even MasterCard, Financial, oh man, got annihilated. right? And also the industrial didn't do too good. So that's not too much green around. So we got a little bit of a mixed bag here on the semiconductor, but even though with some of these semiconductors showing a positive, showing a gain, those gain is minute, right? The only guy is NVIDIA. NVIDIA essentially had something like a 35-point swing from its opening low. So go figure, right? But I think it's scheduled to report earnings soon. So maybe it is setting up, front run the earnings. So be careful, people, if you are trading into earning here. And looking at the heat map for Nasdaq 100, see NVIDIA, right? Yeah, so a few semiconductor here, AMD, Applied Material, Lam Research, okay? Again, Tesla, but all in all, it's pretty much red. Hope you were prepared for this little bit of a transition on the downtrend. And I think we will see a little bit more in the coming day and in the coming week. Don't forget to smash that thumbs up to help me promote and share this video. Thank you for watching and stay safe.